What's up, everyone? This is Dre. This is Talking Stocks, and this is the Dre Show. I'm telling you, I'm gotta work on the beginning. That's right. I am back, and hopefully, you guys can come back, check me out. I am trying to find my video, as I do in every videos. I'm not even sure if I'm streaming, so I don't want to talk for an hour or so, and then like this is not even working. Come on, let's go. Yeah, I don't see my stream. Anybody? Oh, here we are. All right, what's up, everyone? Sorry about that beginning. I gotta get that whole thing straight. 2 videos today. I came out with a video this morning talking about Amazon and how. So I want to talk about that real quick. How Amazon is doing free shipping, or will do, possibly by the end of the year. I'm not sure the time frame. But that's going to be the new Amazon Prime. That's the new Amazon. No 2-day, 1 day. So I won't get into all the things, but it's a retail killer. You know? Retail killer. The next best thing I'm going to say is Walmart, Best Buy. They still struggling with 2-day. And now they're going to 1 day for free. You can't beat that. So I was talking in that video, go long Amazon, and that's exactly what I did today. So I put my money where my mouth is. I'll show you the trade in a minute, but here it is. This is the daily stock. This is the daily of, I know you can't really see to the lower right, I got to keep that in mind, but this is the daily of Amazon, and look at it. It's just strong. What is it up? 0.7 it's looking good after earnings. I think what's going to stop this? Look at this volatility squeeze right here, and how the volatility is expanding. You might get a little hesitation at 2050, but if you beat that high, it's off to the races. Now, I don't know how high it's going to go. I'm just thinking it's going to, I don't know, but it's off to the races. This is clearly the best company, to me, in my opinion, in the world. If you had to go 50 years out, what's going to be the best? Who's going to be here? And I'm going to tell you, and these are the companies that you need to invest in. Amazon's going to be here. Google's going to be here. I'm not sure about Facebook, but, there's going to be some kind of social media, and I'm going to say they're going to be the king of that, possibly. Because something else could come in. And I think Microsoft and Apple, those companies are going to be here. Google, how could I forget about Google? That's Skynet. If you saw the Terminator, that's Skynet right there. And you remember how they was fighting off the robots? This is exactly what's going on. This is what's going on. We're in the early stages. You've seen those robots. Let me tell you something. They can make those robots real. They look real right here, right? And you see the robotish kind of going on here. But let me tell you something. They only doing that because it would be too scary for us. We cannot handle it if the whole face and everything was flesh. We can't handle that. So they got to show us how, it looks robotish. But they can do it, and there's probably some robots out there right now that they're testing. Maybe in China or wherever, somewhere in Asia. But it's crazy. Anyway. Those companies are going to be here. Those companies you have to invest in today. So anyway, this is the weekly. Hey from Indonesia. Indonesia in the house. That's right. This is Dre is worldwide. Hey man, thanks for watching. Muhammad. So anyway, This is the weekly, and I like looking at weeklies because it takes away all that. See all that chop? You don't know what's going on. But look at isolate yourself on this purple line right here, which is my 50-day moving average. This is the 50-day moving average right there. And see that curve? See that, just how it's just nice and smooth, starting to come up again. That's beautiful. So the weekly reflects that, right? It's nice. You can just see it. It's clear. A baby can pick this out. Which way is it going up? Baby could pick that out. You look at the monthly, everything looks a little too steep. We way back here in 1999. Can you imagine getting Amazon for $75? $75. If you had 100 shares, it would be $7,500. Well, this is easy. 1916, right, times 100. Just want to make sure it's right. That will be $191,000 today. And you could do that again. I believe you could do that again. Another 20 years from now, you invest that $7,500, you could possibly turn it into $191,000. I mean, that's crazy. So let me zoom this in a little bit, because it's a little, down there don't matter. It looks like it's crazy. It don't matter. I mean, Amazon was just selling books back then. But here we go. And you could see the steepness comes down into the middle of the Bollinger Band. And maybe we get another one of these trends, which if you count this as A, wait about A to B, B to C, maybe that pullback is only that much. I don't know if it's done pulling back. We're not going to know until it actually crosses that high. If it makes a new high, the pullback is over. Count this pullback from 2050 down here to 1300, B to C, leg 2, up, down. And then if this is B to C, this leg can be as long as this leg. Yeah, that's kind of how it works, Boom, A to B equals C to D. A to B, B to C. Yeah, A to B generally equals C to D. And if it does that, it's got a long way to go. So let's look at a trade I did, what I got going on, and I got several trades going on right now on Amazon. But right now, I bought the leaps. I bought the June 18, 2021. Okay, that's 600. That's over 2 years. No, yeah, it's like, so what is this? That's 2 years and 2 months. Did I get that right? Because next year is 20 and then 21. Yes, that's 2 years and 2 months out that Amazon's going to be over 2,500. Do you think so? Do we need to look at the chart again? Do you think that's going to be over 25? I actually think so. 2 years. Nobody knows, but that's my trade. So I bought 5 of those and I sold 5 of the 2600s, because if I would have just bought one, it would have cost me like, I don't know, $33,000 for one. So I bought 5 of those, and you can see right here, you can't see this because I got my face there. No, I don't know if my face is there or not, but $11,000. That's an $11,000 trade. So that's what I have on the line. If Amazon is not up there in 2 years, I'm going to lose $11,000. Hopefully I can get out if it's not, because like I said, we never know. But if it does reach that and then some, I'm looking to gain $38,905. And I'm going to say thank you very much, Amazon. Thank you guys for buying stuff. You're part of the company. Don't let Jeff Bezos be the only one that can get rich from this. It's crazy. You get involved. So do what you can. Options are affordable to anybody. So that's my trade. And you know what? I don't need it. I don't need it to go to 2,500 to 2,600. Yes, I do, to make the full $38,000. I just need it to start going up. Okay? You see this purple line? See that? See where it is today? 1980. I just needed to start going up, and this trade is making money. That's all I needed to do. All right, so it might chop here. It might go down. It's going to be, I imagine, a little bit before they doing that free 1 day. But I'm telling you, once they do that, money's going to start rolling in. The other retailers are going to get crushed. One of the main reasons why I feel a lot of people that might not shop at Amazon, because it does take 2 days. And other retailers kind of match that, but they're not going to match the 1 day. If they are, they'll be out of business shortly, because they don't own vans, they don't own planes, and they don't own trucks. Well, Walmart has some trucks. All right, companies own trucks. They ain't got planes. or what is it? The final mile type delivery vans and stuff. They're gonna give that to the post office, FedEx, UPS is gonna be hauling that stuff all the way. Hey, Babes is on here. That's Life Like I. Thanks for watching. So we talking Amazon and how it's going to make us a fortune. and I'm in. I'm all in. Hopefully the government don't intervene. See, a lot of things could happen, but that's why it's trades. That's why it's investing. Investing, you hope things that you invest in goes up, but we do know that they can go down. So let's talk about the RUT, which is the Russell 2000 is the index, not the ETF, the index. The ETF for this is IWM. And RUT is basically like the IWM, but it's 10 times. It's 10 times the value or whatever. So I still think this is going to go higher. It's having a good day today. If we pull up the 5-minute chart, look at that. Boom. Right? I was saying I got a whole S-load of trades based upon this. I'm selling puts all the way down. All the way down. So look at the weekly, and you see I'm pulling this up every day because you could see the lines. Could I get rid of this one? Remove the drawing because I was talking to Double D yesterday. If you're in the house, Double D, yo, hit me up. Show me you in here. Anyway, he was talking about an iron condor, and I'm like, you set them strikes a little higher because I think it's going to break out. And it's still pushing up towards that resistance right there. Look what it's doing today. Look at that compression. Look at it. Volatility expansion. The squeeze is on, and who knows how wide that's going to go. But when you see this little squeeze, when you see these narrow bands, and that's why I got the Bollinger Bands on. Sometimes I use them, sometimes I don't. I've been using them lately because I'm selling a lot of puts and stuff. You see that squeeze start to expand, whatever direction that stock is going, it's most likely going to keep on going that way for a little bit. You see it right here. You see it. Look right there. See how narrow that is? And boom! Look at those bands expand, and look at that trend you could have followed. You see it start to narrow, right? It's starting to compress, maybe get out, but it didn't show you any signs of getting out, but that's what happens. See the volatility coming in, then boom, volatility expansion. And that's what the Bollinger Bands kind of display, that volatility expansion. So, you could use these to help your trades. Look for narrow, where it's narrow, and the stock starts to move and the bands start to expand. If I zoom in right here, let's zoom in on this one. See it's narrow, and see how it busted out, and then right here, see how the bands are starting to expand? That's a sign to get in. And what is happening, the stock hasn't been moving for so long. That's why I say put a cup and a plate on it. If you follow my videos, you're gonna know what I mean when I say that. If you could do that, it's a good sign. It's moving, so now it's starting to go up. People is making the trades, and I really can't get into all the reasons why behind it, but god damn it, that's what happens. That's what happens. Like a reverse ski slope. Let me see. Ski slope. Yeah, expansion. I think you could see that, right? So when they start to come in, trade might be over. Like you see it starting to come in. But let's go to the end of this drawing right here. You can see it's expansion. It's just starting. So if you go to the weekly, which is what I'm looking at, it's hitting that resistance. This is why I think it busts through. So I've been selling puts under this, the 1550s, the 1540s. Yeah, 1550s, the 1540s, 10 wide, 20 wide even, and just collecting those crumbs. So let's look at some of the trades I have on. Look at it. See, I guess you can't see, but each one of these lines represents two options because I'm doing two. They different. I got May 3rd expiration, the May 10th expiration. I got one expiring every week. And the first one, you can see right here, I'm looking to gain, if it stays basically where it is or go higher or even a little low, I'm looking to gain $200. Risk 1,800, right? That's that one. Come over here and on this next set, the May 10th, looking to gain $246. If it stays up here, which it's already doing, looking to lose 1754, right? And the last set, looking to gain 152, looking to lose 848. That one is probably the best percentage because I'm further out in time. I got a better probability on that one. You can look at it right there. Add them all together, and you can see my theta. That's what I'm losing. That's the time. Gosh, get it right, Andre. You know what it is. The theta, basically options lose value, okay? And the theta is telling you how much it's losing on a daily basis for the most part. So $145, those options are losing. And since I sold them, that's basically my money, all right? So basically, I'm gaining about $145 a day on those trades just by sitting here. As long as it does nothing, let's look at the chart. As long as it kind of keeps doing that, just put $145 in my pocket. Just put it in there because that's what's happening. And here it is. I'm doing nothing. Well, look. Now take your hourly wage and times it by 8 hours. And what do you come up with? And how hard did you work? Because I'm just chilling. Look, let's see, 145 divided by 8. I'm making $18.12 an hour. Yeah, keep my feet up like that. Oh, yeah. Yeah. Anyway, that's why you got to get into this. Of course you could lose, but learn to manage, learn to... Without risk, there's no reward. See, that's money. I'm talking about making money by kicking my feet up, and money just got made. That's what that sound mean. I got my trades set the trigger off when let me see what it is, because it could be my other account. I sold. No, that's not the trade. I don't think it reached my phone yet. Anyway, I work extremely hard. Yes, you do. Yes, you do. Gonna put some more work in, ain't we? Anyway, what was I talking about? Kicking my feet up, kicking my feet back. Yeah, so, that's it. Without risk, no reward. You need risk. If you want reward, you need risk. So, like when you put on these trades, I could make it where I gain $50 but willing to lose $4,000 or something like that just to make 50. You'd be like, that's crazy. And it kind of is crazy, but you know what? The chances of me being right is damn near 100%. So you see how you risked, you risked for the reward, and the less you risk, the less reward. Even though I guess it could be more reward, but there's a bigger chance that you would lose. You see, so think of it like that. Learn probabilities of success. A lot of that's based on the delta, all right, of a stock. So this is the RUT. And you know what? I'm going to go to Amazon because everybody knows Amazon. So this is Amazon. Let's say if we go out 56 days, and you sell, this is the delta to the right. And let's say you sell this 20 delta. Now, in general, basically that means for every dollar Amazon moves, this thing is going to move like 20 cents or $20. Let me see, maybe 100. The stock is so big I can't even do the math. But basically, it's going to move 1/5, 2, 4, 6, 8 to the dollar. So if you would sell single, that would be $2,030. You could basically put on a line, but you would need a lot more in margin to cover this trade, because if Amazon went to zero, you're going to be in trouble. But if you use the delta as a percentage, you have basically a 20% chance of being wrong and 80% chance of being right. So you could sell that right now, and in 54 days, you could make $2,000 as long as Amazon stays above $17.95. Let's look at the chart. Yeah, that's somewhere down here, right here, right? And you do nothing. You're just hoping it kind of keeps going up. But to eliminate that risk, we sell verticals, so let's cut that in half. So right here, we can make $95, right? $95, and we only risk in $405 if as long as it stays above that. So if you go 95 divided by a little less than 405, that's 23% on your money. If you got more money, you just do this a couple times, 3, 4, 5, do it 10 times, and that $95 will turn into $950, right? So that's how you do it. And you have a 20%, 80, take that back, an 80% chance of being right. Right? That's good odds, right? If I say, hey, man, so you have a 20% chance of being wrong. So I'm trying to think of this in like dice rolls. I can't think of an example. I'm trying to think of an example. Hey, what's up, friend? How you doing, Mahdi Zagar? Can't pronounce your name. So, yeah, how you doing? Hey, my friend. Sound, what country are you from? See, I'm worldwide. This is Dre, formerly EMIP TV, worldwide. I always told you that. Didn't I tell you that, babe, right? I'm worldwide. Anyway, so we're discussing options. We're discussing how I do it. Okay, this is what I do. And I'm not perfect at it. I lose money. I lose a lot. And, I make pretty decent as well. So it's risky, but the more you learn, the better you are. Blah, 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 blah. You can watch me, even though I'm not the greatest teacher. There's a gazillion videos out there on YouTube. Check them out, man. Check out what these guys is doing. Don't buy nobody's book or course. You ain't got to do that. The stuff is free. It's free out there. Just start watching, learn, pick up books, use books. Amazon Prime, you can pick up free books. Get it on your Kindle, your pad, your tablet. And learn how to do this. So let's go back to the Analyze tab. So that's what was going on this is my Amazon, with the RUT. I got to go back to where I was, which is the Russell 2000 Index. And yeah, I'm just thinking it's going to break out. So I'm just selling all of that premium down here. And hopefully I'm right, because if it takes a turn like this, see this bar right here, I could lose a lot of money. So we're hoping that doesn't happen. And that's the risk we're taking. But, you don't have to wait until the end. Wait till lose the whole thing. If you see it going down, to sell it, get out, and reestablish the position when you feel the time is right. So that's what's going on. Chipotle. These stocks I all talked about yesterday. Let's see, 681. This thing doesn't want to get out of its own way. I sold some more options below. I'm afraid of this trade. I really got the revenge thing going on with this one. Yeah, look at that. It came out the gate pretty good today. Now it's like doing its thing. But I got some diagonals going. All right, what's a diagonal? That means I bought calls out in the future. I think about 30 days out. And I'm selling. What am I selling? The calls? Yeah, I'm selling calls more at the money, at the front month option was the next Friday. I'm selling those, kind of collect that near-term premium. And as long as it's kind of keeps doing what it's doing, that's a winning trade. If we look at the analytics, you see that hump. That's what I'm doing, and I got let me take these trades off here. No, not that. This one, that one, and that one. Okay, so you could see what's happening. Where is it at? It's hanging out at 681. Yeah, right here. So if it goes up here, down here, if it hangs in this area, look at this blue line. If it hangs in its area, that's all. I'm making money. I'm not losing money until it's way down here at 657, because I'm selling that premium, And so where am I at now? It's saying right now, I don't know if these is off, because I think this is counting my gains from yesterday. But saying I'm up right now, 1569. If it kind of stays here until next week, it's next week, May 4th, yeah. I'll be up 2,500. And just for doing nothing, the stock doesn't even move when I'm making money. Why? Look at the data. Look at the data. Remember I told you about that? $51 a day. So you take that, the RUT, 148, I forgot what I said, and this 51, basically $200 a day just doing those 2 trades. That's what I'm making doing nothing. Doing nothing. But managing these trades, making YouTube videos. And just selling that premium because options expire. They expire. They're getting sucked out with the volatility. As volatility goes down, the premium just comes out of those. Now, if we have some kind of emergency political event, the premiums will start to skyrocket. The VIX got higher. People start buying puts, makes volatility rise, expand, and then I will be short volatility, right? Am I saying the right thing? And basically, I'll be losing pretty big. But as long as the market kind of stays tame, I'll be all right. I will be all right. So you got any questions? Anybody? Hit me up now or never. This looks like it's going to be a short show today. Today's option expiration Friday. Options expire today. If you got any options, let's look at Google real quick because I was in Google as well. Why are you in these big boy stocks? Ain't you supposed to trade penny stocks and make a whole bunch of money? Buy something for a penny, sell it for $3? Most penny stocks are fraud. Hopefully you know that. Those are fraud, fake companies, Yeah, mess with these things. These are real companies. You use them every day. Use them. What do I have going on here? Trying to see the trade I got on. It's saying, so I'm on the, oh yeah, that's right, I sold it. I had another trade, but anyway, I'm long a call spread, the 1205 and the 1210 that expires January 17th 2020, next year. And as long as Google stays, where is it at now, where it is at or higher, could be all the way down here. Because what did I sold the 1205, right about there. As long as it stays, oh, look at that line. As long as it stays above that line for the next year, I'm looking to make $227. So that's actually a small trade, but the probabilities for that one is high. There's a real good chance that I'm going to be right and collect $227. What's the risk? Let me shrink this out. Yeah, the most I could lose is 273, so that's a good one. So the most I could lose is 273 divided by, this math is going to be wrong. Yeah, that's 120%. 120%. I should have did this trade multiple times in a year. Now, what do banks pay? 2%, 1% for a year? You know how much money you have to put in the bank to get $227 interest? Do you know? I did not have your options with AT&T. No, you didn't, Life Like I. You had options. You had Microsoft options, which you doubled your money in your Ally account. So yeah, that's Ally. It's a good place to save. It's got higher interest rates than most banks, and they also trade now. Yeah, I think it's the former Trade King. Trade King, I think, used to be a broker. It's the former Trade King. They bought them out. It was Microsoft. So yeah, 120%. I should have did that. I should have did more of those trades. I put that trade on when Google was like trading at 1,000 or something like that because I had confidence in the company. Like I said, they're gonna be around. Google, Skynet. Skynet's gonna be around. They're working on the driverless cars and all of that. Anyway, you can see where it was, somewhere around here, almost 1,000. That's when I put that trade on, and it looks like I'm going to be right and collect that 227. And I'll probably be collecting all of that before I back out of this position. Google reports earnings next week, and I had more of a trade on, and I got out of it because, oh man, I don't know. I don't have the earning dates listed on this chart, but here, I think it reported earnings right there. And look what happened. Boom. I think the next one. No, hold on. This is the first quarter. This is where is it at? Find it. Right here. This has got to be it. Somewhere in there. I can't remember, but every time it reported earnings, it lost 100 points. Every time. Every one of these peaks, this is probably earnings here. Just boom, gets slammed, and it's just that's been its MO. And look how it's about to report next week, and look where it's at, right at the top of that Bollinger Band, and I'm afraid it's going to do the same thing. Even though I think they're a much better company. Also, look at this right there. There's a double top right there. So this one's gonna have to show improve. I hope that it doesn't bust. If this doesn't bust and breaks down and somehow can get an all-time high, I might have to do some long leaps just like I did with Amazon on this one, because I think Google finally will have some traction. And oh, somebody's live. This guy that I follow on Periscope's live, and AK was just filed that makes the stock a screen and buy. Don't watch him. Watch me. Oh, man. Bravo, sir. I hope you didn't fall for... somebody said something. Sorry, look at that on my comments. All right, so what was I talking about? Yeah, once this thing... Let's pull up the monthly, which gives us a good long-term picture. See, like it just comes up, it comes up, down, comes up. Every time it hits that line, that upper Bollinger Band, it just can't continue like it did down here in 2012. It just comes back, it just gets checked back hard. So if it doesn't do that in earnings, I think we could go a lot higher. I'm just looking at the volatility. See how it's expanded already? Down here when it had that nice 2-year run, it was compressed, you know. Here it was compressed and it had a run, and then now when it's getting all this check back, the volatility's already expanded. So I don't know what's gonna happen. I don't know. So that's why I'm out, you know. And I just got that little tiny trade on that's most likely gonna make me be right. Anyway, but this is a company where look how the volume is just coming out of Google. This is one of the best technology stocks with the best earnings. The valuation, it's the cheapest valuation. This stock should be much higher if you want to compare it to Amazon or Microsoft or something. It's crazy. What's the PE? 29 PE. If you want to do PEs. Watch me be wrong. PE, yeah, Microsoft's got a 30. Amazon's got a 95. Netflix 132. Right? Can you imagine you give Google a 132 PE? Wouldn't that put it somewhere around, just, I don't know, off the top of the dome? I don't know, $10,000. Anyway, I'm not good in that part of whatever, but it was like a times 10, something like that. Anyway, all right, so I'm gonna go ahead and end this short video today, going into the weekend. Look at, you know, basically I bought things long term, so I do some trading and then I put things long term. Yeah, like, you know, so I just locked in some Amazon long term. I want to be in it for the long run. You know, I could lose. Let me see something real quick. Let me just check out Tesla. What the hell? Oh, it broke. That's it. Look at that. So I need to do a separate video on this because I said this was the next best thing, but now it broke. See that resistance support? It broke. Finally, we broke after a year, after over a year, and wow, 234. We have to see it close down here though. So we have the rest of the month. Anyway, yeah, so I have to take this as my next best thing out because it broke that, and I didn't think it was gonna break. I thought the next break pop will be higher over the resistance, and it didn't. So I have to take it back. Tesla has just been, it's just been, it's crazy with Elon Musk, something else, and the money. It's crazy. This stock could actually go to zero. Maybe somebody will buy it because now it's starting to get cheap. Maybe Apple will buy it, and then boom, it's back up. So remember I said when things break, do what it's supposed to do, and it doesn't happen. So somehow if this comes back into the over support, look for it to go a lot higher. And I have a perfect example for that, and that is Starbucks. I'm going to show you the same thing, right? Look at that. And see how it broke right there? This was a 2.5 year break. Here, let me make it look like I did on Tesla. Kind of, let me get that going and get my pointer. Look at that. 2.5 year break, right? That's what we've seen in Tesla. And then it reversed up and it kept going. So you have to look out for that. And I'm going to bring Tesla back up because TSLA, because you see the same thing. Oh shoot, let me get my, you see the same thing happen. Break, and if it reverses and comes back into support, over the resistance, and then there'll be support. It could do the same thing Starbucks did. So look out. Actually, look, 1.5 years. Yeah, this could be just like a Starbucks, which we'll call that a bear trap, right? It's a trap. All right, so thanks for watching, everybody. Check me out on the replay if you didn't see this. If you've seen it this far, thumbs up the video. I'll be back Monday. Maybe I'll have some quick videos over the weekend talking about trading things, companies, whatever. But thanks for watching. Watch some of the older videos. Watch how I've just been on this crazy run, and I've been right for the last month and a half. And I don't want to brag too much about it because this is the SPY. If you pulled up anything, if you pulled up any stock, you was going to be right. So it's really nothing to brag about. Look at the market. The market was just skyrocketing to the moon. So I don't want to brag. If I'm like, oh man, I was right during this time over here. Yeah, that does nothing. If I was right over here as it's going down and most people are losing money, then there's something to brag about. But yeah, there's nothing to brag about. Everything's going up. So great market. Hopefully you're making money. Hopefully you continue to make money. Hey, Apple, Amazon, Google, Facebook, companies that's going to be around forever. Microsoft, right? They're going to be around forever. They might be that when, McDonald's, you're like, oh man, sure wish I invested in McDonald's way back. Oh man, sure I wish I invested in Coca-Cola way back. For some of these companies, it's still young. Sound like it's old, but it's still young. Amazon is only 20 years old. That's young. It's young. Before it started moving, I'm gonna end it right here. Right here. You look at this chart, it hasn't really been doing much, and then it kind of catches traction right there. Well, what year is that? That's 2014. It's 15, 16, 17, 18, 19, 5 years. It's early. Right? So don't worry about way back here. It wasn't doing nothing. This is where it's catching traction. That's where it's moving. Pull up Microsoft. Actually, that's a bad example because they've been dead for so long. They was dead most of the 2000s. Coca-Cola. Yeah, I wish I can go back and do a bigger chart from when they was new companies, and you'll see what I was talking about. All right, so thanks for watching. This is Dre, and this is the Dre Show. Tune in on Monday. We be back talking stocks and stuff. Maybe that's what I should call it. Stocks and stuff. I like that. You like that, babe? You like that? I like that. Anyway, thanks for watching. I'm Dre. Out.